We will now move on to Mr. Leslie Maasdorp. Leslie, welcome. Leslie is the Vice President and Chief Financial Officer of the new Development Bank. Over the last 25 years, Leslie Maasdorp has occupied senior leadership positions in both private and public sectors. He most recently served as the Managing Director and President of Bank of America Merrill Lynch for Southern Africa. Prior to that, he served as the Vice Chairman of Barclays Capital and Absa Capital. He is recognized as a leader in green finance, a leading expert in green finance, and he has led the new Development Bank's first green bond issuance in 2016. Under his leadership, and thank you very much for that, Leslie, NDB and UNDP worked together to issue the first SDG bond in China last year on China's interbank market. So over to you, Leslie. We very much look forward to hearing the International Development Bank perspective on this important topic. Thank you.
Thank you so much, Beate, for that kind introduction. And let me start by thanking the China Center for International Economic Exchange for providing this platform for us to discuss on this high-level panel. Let me also pay tribute and commend the UNDP for their global leadership role that they have played in sustainable finance. And we are very proud of our partnership, which Beate just touched on, having issued the first SDG bond in China last year in 2021. I just returned from Sharm el-Sheikh at COP27 and was hugely encouraged by the buzz and the electricity at COP27 and specifically at Finance Day, where it was very clear, being surrounded there by regulators, by governments, by leaders in finance, by climate activists, that we have now successfully transitioned to take climate finance and green finance into the mainstream. There is no question that 2021 and COP26 in particular was a breakthrough year to situate the role of finance in the transition towards net zero. I'd like to cover three topics, if I may, in the brief time that I have. The first one is to talk about the unique and important role of China as the largest developing country in providing climate leadership globally. Secondly, I'd like to touch on the changing role and trends in how multilateral development banks are positioning themselves and increasing the scope and scale of climate finance and how we anticipate this is going to evolve over the next years. And then finally, I just want to amplify one or 2 points which Mr. Joe just made, the previous speaker just made on the just transition. Let me start out with the role of China. China, as we all know, is the single largest contributor of greenhouse gas emissions. China has, over the last decade, become one of the leaders and indeed the world's biggest investor in clean and green energy, with vast amounts of investments having been made in renewable energy, both solar, wind power, and so on. As a developing country, China produces something to the order of between 27 and 28% of global carbon emissions. But it has demonstrated very strong leadership, I would say, since about 2013, 2014. In 2016, as many of you might know, China hosted the G20. And for the first time, the communique of the G20 used the words green finance at that Hangzhou meeting. In 2018, in April, at the Boao Forum, which I was also privileged to attend, President Xi Jinping highlighted the green industrialization path as one of the key drivers of China's new industrialization strategy, and pretty much situated green finance right at the center of China's economic development strategy. So we have seen very strong leadership right from the top in China. It is very important for that to be accelerated as we move towards the path toward net zero. Second key point to make about China is that China has the second largest bond market in the world, which just reached $18 trillion. However, this bond market is still fundamentally domestic in character. There has been some reforms introduced to fast-track the introduction of more international institutional investors to be able to invest onshore in China. Special channels have been set up, for example, like Bond Connect. And this path has to continue. The reforms has to continue to ensure that more and more international investors are able to tap into the domestic market in the domestic bond market in China, and in that way to green that substantial fixed income market of over $18 trillion. The second theme I want to just touch on very briefly is the role of multilateral development banks. As we all know, multilateral development banks are uniquely structured to play a leadership role in the financial sector around climate. I say this because most of the multilateral banks, ourselves, for example, we have now shifted all of our lending activities. 40% of our activities going forward will be devoted towards climate finance. The World Bank, the European Bank for Reconstruction and Development, Asia Infrastructure Investment Bank, Asia Development Bank, all of these NDBs are already at 50%, where half of all of their lending activities, whether it's the activity in the form of equity, loans, grants, guarantees, all of the development activities is focused on climate finance. We therefore see our role as changing in the future. We intend to play much more of a catalytic role. We see our role to crowd in more private sector capital. This path of changing the role of MDBs started way back, I would say 7 years ago, when United Nations convened the Financing for Development Conference in Addis Ababa, where the private sector was situated as having to play a very key role in the climate change and climate finance arena. And since then, MDBs have been looking at ways in which we can enrich our toolkit, ways in which we can design new financial instruments to play that more catalytic role. In short, what I'm saying is that instead of us financing a big offshore wind project in the Fijian province as NDB, for example, we would provide the first part of the financing and then enable other institutional investors to co-finance or to use our ability to improve the risk-return profile of the projects to then bring in the larger institutional investors. MDBs indeed only constitute a small portion of the overall financial system, and therefore we need to be much more catalytic in the way that we execute our mandate. In short, to close off on the theme around the role of MDBs, we see our role as playing much more of a de-risking role, doing more credit enhancement, and in that way make better use of our high credit worthiness. After all, development banks, as you know, are the highest rated financial institutions in the world. Thirdly, and finally, I'd like to say a few points about the just transition, which Mr. Joe, the previous speaker, has already given quite strong prominence to this theme, and I would like to underscore what he has said. The key point here is as follows, and this was also emphasized in Sharm el-Sheikh at the COP27 a week and a half ago. The developed world, the industrialized countries, they were able to industrialize during a time where the cost of coal, the price of carbon was not at issue, whether it was in the 1800s or the 1900s. These countries industrialized during a time when carbon emissions was not center stage to the world's agenda. We now have large parts of the world. Let's take Africa, where I am from. Africa has more than 1.1 billion people, but it only produces 3.8%, less than 4% of global carbon emissions. As we look at the transition to net zero, more than 30% of Africa do not have access to sustainable supply of electricity. Many of these countries have cheap coal, dirty coal under the ground. If we are now saying that these countries slow down their own pace and path of industrialization by not tapping into the coal resources, especially those countries that do not have access to renewable energy sources. It is therefore important to recognize that the starting points, the historical starting points, are different of the developed world versus the emerging markets. And we need to ensure that the transition to net zero is just, that we take on board the communities that will become displaced, the stranded assets that will result as a consequence of coal-fired power stations no longer being able to be built in many of these countries. In short, for this just transition process to be a fair process to emerging market, there needs to be a recognition of the historical advantage that the developed world had. And this, by the way, is captured already in the 2015 Paris Agreement. It is just a question of giving effect to that historic undertaking that was made in 2015. And then finally, to close off, I have to highlight, and also several speakers and Sharm el-Sheikh highlighted that a commitment was made in Copenhagen by the developed world for the transfer of up to $100 billion to emerging markets as part of this historical, if you like, responsibility and culpability of the developed world. Most of that $100 billion has not really flowed through to the developing countries. What I'm saying in short is that we have recognized what needs to be done. We're now on the path of implementation, and it has to be done through that just transition lens. Thank you very much for having me, and I look forward to the rest of the afternoon.
Thank you very, very much, Leslie, and particularly also for making time to join us online when you've only just returned from COP27. Really good to hear your impressions of the deliberations on Finance Day, and that really the discussion on green finance is moving to the mainstream of negotiations. And I think I particularly also appreciated your remarks on the role of multilateral banks, development banks, and how focus is shifting on providing a large part of the finance and focusing that on climate finance, and the catalyst and de-risking role that multilateral banks can play in crowding in larger market players and investments from players, which I think also speaks to the point that Mr. Joe from PBOC was making, that if we reduce the risk by 50%, we can actually increase finance by 100%. And lastly, I think on the just transition point, very well taken, of the historical difference in starting points and needing to make sure that in particular in developing countries, we actually ensure that populations affected in areas that rely on the brown economy do not lose out. And I think that from a UNDP perspective is certainly a point or an area where we see UNDP being able to play a role. So looking forward to continuing the cooperation with you as NDB in these areas. And thank you again so much for the ongoing partnership that we already have.